Dirty dealings, corporate battles, consumer woes. This is Evening 5. Telecommunications companies that take up a stake in DNB will have the option to exit by selling their stake to those who choose to remain in the company. Those who leave may then form an entity to provide the country's second 5G network or choose not to participate at all in the equity holding of the second 5G network provider. This was revealed by MACC in a Bursa filing after the telco, together with YTL Power International and Celcom inked their respective share sale agreements, taking up a 14% stake each in DNB. The option is provided in the shareholders' agreement that MACC, YTL, Celcom and U Mobile inked with DNB and Minister of Finance earlier today. According to the filing, the shareholders' agreement sets out the terms for the transition to a dual 5G network model, including a put and call option for MOF Inc. to sell its ordinary shares and transfer its shareholder advance in DNB. An equity restructuring exercise will take place after the MOF Inc.'s put and call option, at which stage investor shareholders will split into one group consisting of shareholders that remain in DNB and another group that will sell its equity in DNB to the shareholders who stay in the company. Those who choose to exit may proceed to go with the second 5G network or not participate at all. In a separate filing, Celcom said it believes it is in a strong position to lead the development of the second 5G network, thanks to its proven track record, substantial experience, and the 4 billion ringgit capital expenditure that it said it has invested to build Malaysia's leading digital network. It is eyeing an end state of 18,000 5G-ready sites to deliver a seamless 5G and 4G experience to Malaysians. The US Department of Justice is said to have entered into a confidential agreement with fugitive businessman Jho Low in a bid to reach a global settlement and possibly a final chapter to the years-long asset forfeiture campaign tied to the 1MDB scandal. Singapore-based Channel News Asia said in a report today that documents it reviewed showed the global settlement agreement would forever resolve the US's civil, criminal and administrative asset forfeiture actions or proceedings relating to the disposition of assets tied to 1MDB. Citing the documents and executives close to the situation, it said the DOJ signed the deal in early June with Jho Low's family lawyers and their financial trustees. It would involve surrendering assets previously identified by the authorities, as well as those not previously claimed or captured by prosecuting agencies worldwide under a fresh settlement plan. The confidential agreement, which has yet to be publicly disclosed, is tied to the announcement on Wednesday by the DOJ that it is to recover an additional $100 million in resolving 2 civil forfeiture cases. MACC has obtained a remand extension for the CEO of a highway concessionaire arrested earlier this week over alleged bribery in connection with 2 highway projects worth 1.67 billion ringgit. The remand was initially set to end today. In seeking the extension, the MACC had claimed that it was necessary so that potential witnesses in the case will not be interfered with. Lawyers Wan Aizuddin, Wan Muhammad and Farhan Reid, who represent the CEO, objected. Wan Aizuddin said the MACC's probe was not done in good faith and amounted to a fishing expedition. He was alluding to posts on social media platforms X and TikTok by the anti-graft agency. Wan Aizuddin submitted that the posts contained more than what the MACC had divulged to them as counsels when the client was first remanded, and that anyone else who might have been involved in this case would have had the chance to run. Despite their objections, the magistrate allowed extension of the remand, which now expires on July 2nd. On Tuesday, Project Lintasan Kota Holdings or Prolintas issued a statement saying it was aware that its personnel had been remanded by the MACC and that it was cooperating with the authorities. Kucingko set its initial public offering price at 30 cents a piece, aiming to gross 60 million ringgit from the ACE market. The company is said to be the first listed animation production studio in the country. The IPO involves a public issue of 100 million new shares and an offer for sale of 100 million existing shares. All in all, the listing offers investors up to 40% of the enlarged issued shares in Kucingko. Its executive director Andrew Oikokong said the funds raised from the IPO will help the company meet the increasing demand for high-quality animation content in Malaysia and beyond. Kucingko would have a market value of 150 million ringgit. The IPO price values the company at about 18 times its net profit for FY 2023 of 8.36 million ringgit or 1.67 cents per share, according to the prospectus. It has earmarked 17.77 million ringgit to set up branch offices in Sabah and Sarawak, as well as refurbish existing production facilities in Selangor. 4.38 million ringgit will go towards setting up a sales office in the US, and 4.26 million ringgit will be set aside for working capital requirements. The rest will be used to defray listing expenses. MAHB's 2 units are seeking a summary judgment from the KL High Court against MYAirline in the claim for 17.74 million ringgit in overdue airport service charges. The move against MYAirline has not been reported previously. MYAirline had sought to strike out the bid by Malaysia Airports and Malaysia Airports Sepang, for which oral submissions were heard on Friday before Judicial Commissioner Gan Tae Cheong. Gan has fixed August 16th to decide on this. If he dismisses MYAirline's bid, he will then decide on the 2 firms' application for a summary judgment. Eric Gomez, who is one of the lawyers representing Malaysia Airports and Malaysia Airports Sepang, confirmed the outcome of Friday's proceedings. The airport operators are arguing for a summary judgment, as MYAirline has not filed any defence to the suit that they filed in October. MYAirline claimed that the matter should have gone to arbitration under the Malaysian Aviation Commission Act, on top of the 17.74 million ringgit owed. The 2 firms also sought general damages, interests and costs of the action. MYAirline ceased operations on October 12 last year.